All right, let's get straight to it. You're tuned into Talk Tickers, and today we're dissecting the latest earnings call from Zimmer Biomet, ZB, on the ticker.
That's right.
Our job is simple: cut through the corporate speak and deliver the core insights you need.
And from the top, Zimmer Biomet posted a pretty solid quarter.
Solid despite headwinds.
Yeah, despite having one less selling day this year, which is always tough, they still managed to achieve 2.3% growth in sales on a constant currency basis.
Okay.
That's a key indicator, of the underlying business strength.
Okay, so 2.3% constant currency, that's the headline. But where did they see the real momentum? Any standouts?
Oh, definitely. The U.S. hips market was a clear winner, up nearly 4%.
4% in U.S. hips, wow.
Yeah, and this growth is really being fueled by their Magnificent 7 product cycle, specifically thinking about the Z1 hammer and orthog systems.
Okay.
And what's particularly interesting here, I thought, was that roughly half of the surgeons adopting their Z1 hip stem, they're switching from competitors.
So market share gains then, not just growing the market, but taking share.
Exactly. It suggests they've got a real competitive edge with that specific product line.
Okay. Anything else stand out in the U.S. results?
Yeah, their U.S. sports medicine, extremities, and trauma, ASCs, that division also showed strong growth.
Good diversification there.
Right. And looking at the bigger picture, they're holding firm on their full year forecast for organic constant currency revenue growth, still expecting between 3% and 5%.
That consistency is good to see. Investors generally like that.
Absolutely.
Now, acquisitions often play a big part. What's the latest on that Paragon 28 deal?
Yeah, good point. The recent acquisition of Paragon 28, which actually just closed in April, is projected to add a significant boost. They're saying 270 basis points to their sales growth for the full year 2025.
270 basis points, that's quite an impact.
It is. It clearly signals their intent to expand and diversify into that faster growing extremities market.
Makes sense strategically. And how are these results and the acquisition, how's that affecting their profit outlook, the bottom line?
So they've updated their adjusted earnings per share, the EPS guidance for the year. The new range is $7.90 to $8.10. Now, this adjustment, it takes into account the anticipated headwinds from tariffs.
The tariffs. Always a factor.
Always more. But they believe that'll be largely counteracted by a weaker U.S. dollar and their own cost management efforts.
So some puts and takes there.
Exactly. The EPS forecast also includes, as you'd expect, a modest dilution effect for the Paragon 28 acquisition.
All right. Typical for an acquisition. So overall, a solid quarter, specific strengths, a key acquisition moving forward. Let's dig a bit deeper now, maybe starting with that U.S. market performance beyond the headline numbers.
Sure. So the U.S. business overall grew by 1.3%, as we said, driven by those strong showings in hips and set.
Okay, 1.3%.
But what's quite interesting, I think, is the strategic overhaul they seem to be undertaking with their U.S. sales channel.
Oh, what are they changing?
Well, they're moving towards more specialized sales teams and also increasing their focus specifically on the ambulatory surgery center, the ASC market, and of course, their robotic surgery platforms.
Specialization and ASCs. Why the big push there now, do you think?
Well, it really indicates a targeted effort to sort of reignite growth in the U.S. market, maybe after a period where it's been a bit slower.
Right.
By having these dedicated teams and focusing on ASCs, which are just becoming increasingly important.
Definitely a trend.
They aim to be more responsive, right, to specific market needs, specific opportunities. And the intensified focus on robotics, well, that just underscores technology's growing role in orthopedics.
Makes sense. Now, knees are obviously a huge part of the orthopedic market. How did Zimmer Biomet's knee business fare this quarter?
Globally, their knee segment grew by 1.9%. If you break it down, U.S. knees were up 2%, while international knees showed a bit stronger momentum, up 4.2%.
Okay, bit stronger internationally.
Yeah, but they do anticipate an acceleration in U.S. knee growth as we move through 2025.
An acceleration. What's behind that expectation?
It's primarily driven by two things. Increased adoption of their Persona Osseoti cementless knee implant.
Cementless.
Exactly. And the full commercial launch of their Oxford partial cementless knee. That cementless knee technology, it really seems to be gaining traction.
What kind of penetration are we talking about?
They said over 25% penetration in the U.S. already with cementless knees. And they foresee further growth there as, more surgeons get trained and the supply chains get fully optimized.
Over 25% is significant. And that Oxford partial cementless knee, didn't it have some pretty compelling data.
Absolutely. The Oxford Partial Cementless Knee has received PMA approval in the U.S.
That's the big one from the FDA, right?
High bar. It is. It signifies robust safety and efficacy, and the clinical data they presented shows a 93% survivorship rate at 10 years.
93% at 10 years.
Yeah, which they were quick to point out is better than traditional cemented implants.
Impressive.
They've apparently already trained hundreds of surgeons on this, with more training sessions planned. And we also heard about the European launch of their Persona Revision knee implant. That's for revision surgeries, which should also contribute to international growth.
Okay, lots happening in knees, especially with cementless. Let's circle back to SET Sports Med, Extremities, trauma. We know it had a good quarter globally. What was driving that?
Right. Globally, CEFA grew by 4.9%. The leaders there were their CMFT category, that's upper extremities and foot and ankle, and their sports medicine portfolio.
Okay.
And the Paragon 28 acquisition is strategically really important here.
Wow.
It's going to significantly expand their extremities portfolio, actually making their overall set business larger than their hip business post-acquisition.
Wow, bigger than hips. That's a shift.
It is. And it aligns perfectly with their broader strategy of diversifying into these faster-growing segments within orthopedics.
Okay, so Paragon 28 is clearly central to that diversification play. Now, their technology and data segment, that actually saw a decline. What was the story there?
Yeah, that segment was down 3.5%. But it's important to look at the context.
Okay.
They had really strong prior year performance, creating a tough comparison. And there's also been a deliberate shift in how they deploy their ROSA robotic system.
A shift. How so?
They're moving more towards utilization-based placements, sort of like rentals or leases, rather than just outright sales of the robots.
So maybe less revenue up front, but potentially more recurring revenue over time, a pay-per-use type model.
Exactly. And they've hit a pretty significant milestone, 350,000 surgeries performed using the ROSA system.
350,000. That shows real adoption.
It really does. And looking ahead, they've submitted their next generation ROSA system, the MB15, for approval. They expect it to offer, enhanced accuracy and a better user experience.
Continuous improvement there.
Right. And they're also actively working on making ROSA compatible with CT scans, which is important, and forging partnerships like with Think Surgical to further enhance their robotic offerings.
So technology clearly remains a major area of focus and investment, even with that quarterly dip. Beyond these specific business segments, Zimmer Biomet outlined some broader strategic priorities. What were the key themes?
Yeah, they highlighted three main areas: people and culture, operational excellence, and innovation and diversification.
Okay.
On the talent front, they're actively investing in their team. They're bringing in new leaders across strategy, innovation, business development, commercial operations globally, with more U.S.-focused changes planned too.
Investing in people often signals, a renewed focus or a strategic shift. What about operational excellence? What does that entail for them?
This pillar focuses on several key things. One, improving their U.S. market performance, which we've talked about. Two, optimizing those sales channels for greater efficiency. Three, a continued drive to improve their profit margins. And four, better management of their inventory levels.
Inventory can be a drag.
Definitely. They specifically mentioned a significant decrease in their days on hand for inventory, which is a positive sign. Better efficiency in the supply chain.
Good to hear. And the third priority, innovation and diversification. That sounds pretty broad. What are the main areas they're targeting within that?
Yeah, it's quite comprehensive. Their efforts here are centered around addressing unmet needs in musculoskeletal health and related adjacent areas. They've sort of categorized these into four buckets: awareness, safety, efficiency, and outcomes.
Okay, break those down for us. Awareness.
In terms of awareness, that partnership with Arnold Schwarzenegger.
Yes, the You'll Be Back campaign.
That's the one. It's a notable initiative to reach patients directly, alongside other partnerships to educate people about joint replacement.
Makes sense. What about safety?
Safety is huge. Their development of iodine surface-treated implants aimed at reducing prosthetic joint infections, or PJIs.
PJIs are a massive problem.
Huge. That technology is particularly interesting. They plan to launch in Japan this year, followed by the U.S. Also under safety, investments in tech that can speed up surgery, like through their one-team acquisition.
Right. Faster surgery can mean less risk. Those iodine implants, though, that could be a game changer if effective. What about efficiency and outcomes?
On the efficiency front, they're exploring smart implants for data collection aiming to maybe make CT scans optional for some robotic procedures down the line, and using AI to cut surgical times, like with their ortholog system.
Smart implants. AI, the future is now, eh?
Seems like it. And regarding outcomes, the focus is enhancing patient satisfaction. The strong clinical results of that Oxford partial cementless knee are a prime example of a product designed explicitly for better patient outcomes.
Got it. Let's just quickly revisit the Paragon 28 acquisition. We know it closed recently. How's the integration actually going on the ground?
According to the call, the integration is proceeding very smoothly. Very positive comments there.
That's good news. Early days, but still.
Right. And importantly, Paragon 28's CEO, Albert Costa, and his key commercial leadership team have joined Zimmer Biomet. That suggests a commitment to keeping that valuable expertise.
Retaining talent is key in acquisitions.
Absolutely. And they also reported that the entire U.S. sales force of Paragon 28 has signed on. That minimizes potential disruption. The stated goal seems to be maintaining Paragon 28's, entrepreneurial spirit and its innovation pipeline within the larger ZB structure.
Sounds like a well-managed process so far. Okay, let's pivot slightly and touch on some of the key financial details beyond the top line. Pricing, margins.
Yeah, they reported positive pricing trends for the 5th consecutive quarter. That indicates some level of market leverage, which is good.
5 quarters of positive pricing. Nice.
However, their adjusted gross and operating profit margins were slightly lower compared to last year. But they did state this was in line with their internal expectations.
Okay, expected dip. Anything else on the cost side?
They noted an increase in net interest expense. That's due to higher debt levels, likely from acquisitions, and of course, higher prevailing interest rates. But importantly, they continue to generate strong free cash flow.
Strong cash flow is always good. And what's their updated outlook for the rest of the year? Thinking about currency impacts, tariffs.
Okay, so foreign exchange rates, FX, are now actually projected to be a slight tailwind for their full-year results.
Oh, a tailwind. That's a positive shift.
It is. Regarding tariffs, though, they are anticipating a negative impact, around $60 to $80 million hit on their operating profit for 2025.
60 to 80 million. Ouch. When will that hit?
Mostly in the latter half of the year, particularly heavy in the fourth quarter. They did emphasize, though, that this 2025 tariff impact shouldn't just be extrapolated straight into 2026 because of various factors like annualization effects and how inventory costs are accounted for.
Right, accounting nuances. So tariffs are a headwind they're actively managing. What does this mean for their overall profitability and cash flow guidance for the full year?
Well, they now expect adjusted operating profit margins to be down for the full year. That's primarily due to that tariff impact we just discussed, and also the costs associated with integrating Paragon 28. Although they do anticipate an improvement in margins in the second half of the year. Their free cash flow guidance has been lowered, again, mainly reflecting those tariff headwinds and the one-time costs from the Paragon 28 deal.
Okay, FCF guidance down. But what about revenue growth?
They expect their organic constant currency revenue growth to be stronger in the second half of 2025. That's driven partly by easier year-over-year comparisons, but also by the launch of new products. And they anticipate Q2 growth will be slightly higher than what they just reported for Q1.
So an expected pickup in growth momentum. We also heard them mention some changes within their U.S. sales organization. What's the reasoning behind those adjustments?
Yeah, they are implementing changes to their U.S. commercial structure. The primary goal is simply to accelerate growth.
How?
It involves adjustments to leadership roles, some territory realignments, and modifications to their sales incentive programs. The overarching aim seems to be fostering greater specialization within the sales teams.
More focus.
Exactly. A stronger focus on the set segment, and also really expanding their presence in that ASC market we talked about. They did state, importantly, that these organizational changes aren't expected to have any impact on their current financial guidance for the year.
Okay, internal adjustments aimed at growth, no change to the outlook. Finally, before we move on, what's their appetite for more deals? Further M&A, now that Paragon 28 is kind of settling in?
They indicated they still maintain a strong balance sheet, and they definitely have the capacity for further strategic M&A activities.
So they're still looking.
Seems so. Their focus will be on acquisitions that are projected to positively impact EPS within a couple of years, so accretive reasonably quickly, and that align with those key strategic priorities we discussed.
Like ASCs and SET.
Precisely. ASC space, the SET market, other faster growing areas within orthopedics, and also companies focused on data and technology. They emphasize they don't currently see a need to go outside their core focus in musculoskeletal health. and they have this goal of achieving a 5% weighted average market growth rate by the end of 2027. M&A will likely play a part in hitting that.
Right, 5% WAMGR by end of 2027. Okay, that's a really comprehensive look at the quarter and their strategy. Let's try to put this into context for investors listening. What are the key takeaways you see here?
Well, I think first, the strong performance in U.S. hips, combined with that expected acceleration in knees, really suggests their Magnificent Seven product cycle is gaining significant traction.
Yeah.
That's a big positive. Second, their strategic focus on the ASC market clearly aligns with a major, powerful trend in healthcare delivery. They're skating to where the puck is going, so to speak.
Good analogy.
Third, their proactive approach to mitigating the tariff impact, acknowledging it, planning for it. That's a positive sign of management's attentiveness. Fourth, the smooth early integration reported for Paragon 28. That bodes well for their ambitions in the fast-growing extremities market.
Yeah, integration risk is always a concern.
Exactly. And finally, I'd say their ongoing commitment to innovation, especially in critical areas like infection prevention with those iodine implants and robotic surgery, that could really provide them with a significant and sustainable competitive advantage long term.
Okay, clear takeaways. Now, this next part is strictly not financial advice.
Definitely not.
It's our segment where we brainstorm some, let's call them outrageous but plausible trade ideas, thinking about the ripple effects, the second and third order consequences of what we just discussed. You go first.
Okay. Outrageous but plausible idea number one. Given Zimmer Biomet's very clear strategic push into the ambulatory surgery center market and the expectation that this shift will continue across orthopedics, one potential idea, maybe less direct, could be to look at taking a long position in companies that actually specialize in developing and managing ASC facilities themselves.
Oh, the infrastructure play.
Exactly. The thinking is, as major players like ZB drive more procedures into ASCs, these facility operators are likely to see increased demand for their services, their real estate, their management expertise. It's a way to potentially benefit from ZB's strategy without directly owning ZB stock. Playing the ecosystem, if you will.
Interesting. Playing the ecosystem around the trend. Okay, my turn for an outrageous but plausible idea.
Let's hear it.
So Zimmer Biomet highlighted their big effort to tackle prosthetic joint infections, the PJIs, especially with those upcoming iodine-coated implants.
Yeah, key focus.
TJIs are devastating for patients and costly for the system. So another idea, perhaps more speculative.
Higher risk.
Higher risk, potentially higher reward. Could be exploring a small strategic investment in companies developing completely novel diagnostic tools, or maybe early-stage treatments for PJIs. If ZB's preventative tech works really well, it might actually increase the focus on catching any remaining infections super early or treating them differently. It could expand the market for complementary PJI solutions.
So ZB's success could lift other boats in the PJI space. Diagnostics or alternative treatments.
Potentially. It's definitely a bet on innovation in a related critical area.
Intriguing ideas, both of them. Okay, so to wrap things up, Zimmer Biomet delivered, I think we can say, a resilient first quarter, showed strength in key spots like U.S. hips, and strategically moved forward with the Paragon 28 acquisition.
Yeah, they seem to be actively managing those economic headwinds like tariffs, making internal changes to fuel growth, all based on new products and those clear strategic priorities.
Definitely. It'll be really important to watch the adoption curve for their cementless knee technologies in the coming quarters, and of course how that Paragon 28 integration continues to unfold.
And maybe a final thought for your listeners to chew on. How might the increasing focus across healthcare on value-based care further accelerate this shift towards ASCs and orthopedics that ZB is betting on? And thinking about Paragon 28, how will the competitive landscape in the extremities market really evolve now with Zimmer Biomet becoming such a significantly larger player there?
Good questions to ponder. That concludes our deep dive into the Zimmer Biomet earnings call.
For more in-depth analysis of earnings calls and the insights that drive the market, be sure to subscribe to Talk Tickers wherever you get your podcasts. And remember, this is absolutely not financial advice.
Please always do your own thorough research before making any investment decisions.
Join us next time as we unpack another crucial earnings report.